Oh, we're back here, Money for Breakfast weekend. And the stock market's been, I guess, volatile is the one way to say it, these wild swings. It's hard to know where to put your money, especially if you're an individual investor. And we wanted to take a second here on the weekend show and try to give you some advice on what to do. Doug Flynn's with us from Flynn Zito Capital Management.
Doug, good morning.
Good morning.
Listen, the first thing I have to ask, because every time people stop me in the street, they say, Charles, I did everything they told me to do. I had a little bit of stock, I had bonds, I had fixed assets. And
It's all down.
It's all down.
Right.
I got crushed. So what is the game plan?
Well, the game plan is that a traditional allocation model would typically only have stocks and bonds in it. And the ones that you probably should be using and the ones you want to use now certainly have stocks and bonds in there as the core. But as a satellite to that, you want to have some alternative strategies in there.
Such as?
Such as you can use, the most common one would be market neutral, where if you look it up in Morningstar, it would be under the long-short category. Right. But there are other strategies. That's also where you put in your commodities and those other types of assets that might zig when everything else zags. And so if you reduce a little bit of the stocks and a little bit of the bonds and bring in some of those strategies.
Can the average person do that, though? When you say long-short, it sounds like this type of hedge fund stuff, and hedge funds were the biggest losers in 2008.
Yeah, you can do it. There are mutual funds. That's the easiest way for an individual investor to do it, even with a smaller amount of money, and leave that shorting to someone who's doing that every day.
Right.
But again, that category is long-short in Morningstar, and just about every fund family will have a fund like that. You can look at how that fund did in this past year, and had you had, depending on what your allocation is, 10, 15, 20% of that in there, you would have had something that probably had positive performance last year.
That saved you a little bit from the downside. I want to talk a little bit about allocation in terms of asset classes. I know you're still, what, 50+% in stocks for the model portfolio? And is that down versus what you had been? 52% stocks, 32% bonds, is that right? 33% bonds and 15% in these alternatives that we talked about.
This is a moderate allocation portfolio. The traditional one, most books and most things that you come out with on the computer will come out with a 60-40.
Right.
If you're a moderate investor, you're 60% stocks and 40% bonds. So what we do is we tweak that a little bit to bring in those alternatives, and that's where this comes from. What this would do is absolutely help you significantly in a year like last year. And it also brings some value. It doesn't mean that if the market rallies up to 14.1 on the Dow tomorrow that you're not going to make money on your market neutral stuff.
Right.
You just might not make as much. But most people would be willing to give up a little bit of upside for some downside protection right now.
Doug, we've got about a minute left. What about some of the things that people are doing that might be no-nos? I know a lot of folks say, you say have 100 grand, so now they have 30, and instead of buying stocks, they're buying options. Yeah. Is that a no-no in your book? Is that just trying to make a shortcut?
Sure. To me, that's like you're losing half your money at the casino, and now you're trying to double down and make it back, and that's a recipe for disaster. Listen, you can't get away long-term from the true allocation and diversification. It may not have worked in 2008, but I've seen this before. I've heard allocation is dead. I heard it in the late 90s when all you had to buy was tech stocks. Right. Allocation is dead. Right. It will come back, and so this is a way to just bring in some other things. And in the fixed income category, take a look at munis and take a look at the corporates that are severely underpriced, not treasuries.
Okay. Doug Flynn, Flynn Zito.
Great advice.
We hope. Yeah. Otherwise, we'll get it. All right. Anyway, we want to dig into the mailbag here, which we're going to try to